Shopping is hard.
I can never find anything in my size.
I don't even know my size.
I buy my clothes the same place I buy my groceries.
There's a better way. Make it easy with Stitch Fix. Just share your size, style, budget, and done. Your personal stylist sends pieces picked just for you.
That was easy.
Stitch Fix. Online personal styling for everyone. Free shipping and returns. No subscription required. Get started today at stitchfix.com.
Your burger is served, and this is our finest Pepsi Zero Sugar. Its sweet profile perfectly balances the savory notes of your burger.
That is one perfect combination. Burgers deserve Pepsi.
Welcome to Farm Here Daily, a Field Forward podcast. I'm David Geiger, your host. I've been on Iowa TV and radio for the last decade, and I am excited to join you on this podcast, Farm Here Daily. Today on the program, we talk about the latest USDA reports and commodity trends with market analyst Jamey Kohake. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining us on Farm Here Daily, I have Jamey Kohake. He is a market analyst. He is the senior risk manager with Pinion, and he joins us today post the USDA acre and stocks report. Jamey, always good to be talking to you. I really appreciate your time today. And what's kind of that initial impression you got after that report?
Pretty much a neutral reaction, a little bit supportive in beans, pretty much nothing in corn. Market, really didn't do much after it either, after the numbers came out. We saw soybean acres at 83.3, average guess is 83.6. So not much there. Also, too, on the corn side, we saw stocks at 4.64. Average guess was 4.64 as well. So not anything that was set up to be a game changer at all. We're still not right now just completely focused on weather. We'll see the crop conditions out Monday afternoon, expecting about 1 higher in corn, by 2 higher in beans. There's not any real major weather heat ridges, heat domes in the forecast right now at all. The crop's off to a very, very good start right now. And obviously these next, 45 days, we'll get a better handle on it then. But so far it looks to be a pretty depressed market.
I was looking to some reactions as the numbers came out from the U.S. Department of Agriculture, and it seemed like the market was really keyed into the estimates. Is that pretty typical for this June report, or does it tend to be a little bit more variable?
Yeah, a little for this June report. Quarterly reports usually historically can be pretty volatile. Didn't have much here, today with the numbers to do that, even with the acres, on the corn side, 95.2. Average guess was 95.3. So, there was very little deviation from what the market had expected, and kind of just saw the market go sideways to lower once the numbers did come out. Big fund money, managed money is actually short very aggressively too right now.
That just indicates to me that the markets are getting better at deciding or guessing on what farmers are doing out there outside of the U.S. Department of Agriculture. Do you agree with that?
Yeah, I think just here the last, probably this calendar year has been better than the previous few years, even probably going back like 5 years with some of the numbers that we've seen on the carryout side especially. But a lot of this is algo trading, and you type in your code word and code number, and something hits, it doesn't, or it doesn't shake the market up. So didn't really have a huge kickback, wild trading session at all.
I think of agriculture as one of the premier ways to see the latest technology on hand. Do you think some of the AI that's been implemented across, we see it in our day-to-day lives, even when you call a company and talk to them, or even just on ChatGPT, plenty of things, is that being used in agriculture to have a really good guess and a really good decision-making tool for folks that are analyzing and folks that are experts?
I think there's still room to grow in that space. There is a little bit going on right now. What I have seen, it needs to be upgraded big time. Mm-hmm. On the actual farming side. Tractors have been driving themselves, for years, decades now. And but on the AI side of the trading side, it's more just algos, just banging out trades, quarter of a cent at a time, eighth of a cent at a time, and just literally, code word Trump pops up and you buy the S&P or whatever. I mean,
That's right. Yeah.
Computer's word.
Jamey, as kind of following that same type of idea, I think too that there's a lot of trading that goes on, and there's folks interested on that side. But when it comes to the farmer, you have to have a business plan when it comes to how you look at the marketplace and how you sell. When it is so volatile, when you see prices go up and down like this, what are some of the things you recommend or just talk about as you look at these big reports and as they come out to deal with that side of things on, oh no, if I sell now, I might lose a few cents, if things go crazy tomorrow. What's that approach you take?
Yeah, historically, kind of seasonal pace, when to buy and when to sell. You look at, seasonals, right now, this week or last week is usually seasonal high. And we didn't get any type of, weather rally, free 4th of July rally. Doesn't look to be coming either. We kind of moved the highs up the last 2 years per the Juneteenth holiday instead of July 4th. And it looks like that was probably, again, this year, that was kind of the seasonal high. But wait and see if we can get something going maybe Thursday coming into the long weekend, if much of the shorts want to get out. But at these current levels right now, I mean, if you haven't already hedged some, sold a bunch, whatever, in the cash market, I would just sit on your hands, both corn and beans. There's not a whole lot of incentive, I don't think, right now, until we get into maybe August, see some more weather there at the beans, and maybe catch a rally there to sell into. But right now, like for new crop corn, I mean, I think it'd be a grand slam if you even get back to 460. I mean, that's just based on current growing conditions right now.
With EA Sports College Football 26, you can rise from high school recruit to Heisman legend or cement your legacy as a coach by leading your program to glory. Pre-order the deluxe edition of the game today as part of the MVP bundle at go.ea.com/MVP-bundle to start playing 3 days early and more. EA Sports College Football 26 is rated E for everyone. Includes in-game purchases, including random items.
Jamey, hold that thought. We're going to continue this conversation in just a moment on Farm Here Daily. But first, let's take a quick look at the Monday market close. And it sure looked like the market had baked in some of that USDA report information. July corn 3 cents higher, 420.5, with September down 2 1/4 at 409 1/4. Soybeans in July 3.5 cents weaker at 10.24 1/4, with August falling 3.5 cents at 10.29 3/4. Soybean meal in July 20 cents a ton in the green at $271.30. July wheat up 4 cents, 5.28 3/4, with September down 2.5 at 5.38 1/4. In the livestock market close for Monday, live cattle in June, $1.12 a hundredweight more, $225.87, with August 57 cents higher at $213.87. Feeder cattle in August, $2.77 a hundredweight more at $310.67, with September $2.72 higher at $310.62. Lean hogs in July, $3.15 a hundredweight in the red at $110.10. August down $2.77 to $107.50 a hundredweight. That is the Monday market close. This is Farm Here Daily.
Parents of tweens, if you're familiar with far-off drop-offs...
Dad, stop, right here.
Or get DMs about what's for dinner, you may be experiencing tween milestones. For your son or daughter, these can start at age 9. HPV vaccination, a type of cancer prevention against certain HPV-related cancers, can start then too.
For most, HPV clears on its own. But for those who don't clear the virus, it can cause certain cancers later in life.
Embrace this phase. Help protect them in the next.
Ask their doctor today about HPV vaccination. Brought to you by Merck.
As we look at some of the results we got from the reports today, and it seems pretty baked into the marketplace. Corn closed down 2 cents, soybeans closed up 2 cents. What is kind of that baked in factor? When do you see those pieces of news like Brazil's going to have its biggest safrinha ever, things like that, or is that just a little bit every day, a little piece every day now at times?
Yeah, pretty much a little bit chunk at pretty much every day, where, past years you may have to wait until the monthly WASDE report, see something there. But with all the social media and pictures and numbers and all the private estimators now, literally putting out weekly, updates, if not daily updates. And so a lot of that, by the time, like you're saying, by the time you get the government reports, it's already been baked into the market. Soybeans, back to the marketplace there. I mean, you might be able to catch a rally, since the 45Z is in this big, beautiful bill now. Maybe the beans can, see some short covering and spill over into the corn yet. But just the upside is very, very limited right now in corn. Like you're saying, we got the, biggest second corn crop down there that we've ever seen.
On a similar note, the stocks report was also alongside this grains or this acreage report. And in the stocks report, there was seemingly a bit of off-farm storage decline or on-farm storage decline. Yeah. What did you make of that?
Yeah, I think there's just some nervousness here at these, seasonal kind of highs that we should have hit one last week and or this week. And we've just seen guys just kind of just pull the plug and say, I'm selling everything while I can still, at least break even. And storage, really hasn't paid. If you actually break it down penny by penny and with the carry in the market and all that, it hasn't been that beneficial here lately. And two, like I said, just, these lower prices have no incentive at all. It's just like to sell it, and we have to re-own it on paper, futures, and options. We can't do that later on.
Where is a lot of the grain going nowadays when folks are looking at selling here in the U.S.? Because there have been some pretty big trade disruptions around the world. But I was seeing that a lot of Brazil plans on keeping some of its corn rather than sending it to exports. So that might play into, even though it's so big, it's not exporting as much. How does that play on the U.S. side?
Yeah, it's been a touchy subject for sure. Like you're saying, with the tariffs, we saw, it's quite a few countries kind of front load a bunch of exports, and Mexico, Japan, was doing that pretty aggressively. And then it died down about 2 weeks ago. We saw a good number last week, exports in corn. But really, our main partner the last 3 months is Mexico with corn and with soybeans, surprisingly. But it's still cheaper for China to go to Brazil for beans right now. We'll see how, the tariffs do go with China. Supposedly we signed their deal last week. I haven't seen many details on it, especially on the ag side. For going back to the phase one or whatever it is, I just haven't seen a whole lot on that yet. But it gets tougher and tougher, like you're saying, with all this unrest and tariffs, no tariffs, back and forth. And really, surprisingly, with all this news, some of the negative news at times, corn is above the average pace that we need for the USDA projections.
I want to ask just how it relates into that international exporting factor as well, because if I recall correctly, and I could be misremembering, but I remember that the U.S. dollar index was, I think, at 106 at the start of the year, and it is now at 96. How is that playing into this?
Well, it should be positive as all get out. And I'm glad you mentioned that, because you go back 10, 15 years even, whatever, you get up 4 or 5 o'clock in the morning, check the markets, the U.S. dollar is lower, crude oil was higher, metals are higher, grain's going to be off to the races. And we had the dollar breaking out to new contract lows this morning. And I know there was a big report out, but nobody's even talking about it at all. But it should be so beneficial to our exports. But I think the tariffs have really taken the front spotlight, with the export front, and nobody cares about the currencies right now.
And just because I'm not as informed on this matter, when you see the U.S. dollar go from 106 to 96, does that mean that the power of the dollar has decreased by about 10%? Is that what that means?
Yeah, that is correct. Yep. And I think there's some manipulation with it as well too, per the tariffs, especially with the Chinese yuan. I know Trump is upset with that, wanting to kind of devalue the U.S. dollar to make us more competitive worldwide. So I think there's other factors in there as well.
Now, this might be more of like a philosophical or meta question in a way, but what's the general feel among folks who study the market, who deal with it every day when it comes to a strong U.S. dollar versus not so strong? Because I understand there's some pros and cons to both of them when it comes to trading and stability. But what is that idea? Is there like a balance between both of those ideas?
Yeah, I mean, yes, pretty much. Right at par. Par would be 100. If we stay down here where we are, you'd assume we see an uptick in export business. You go above par, you see a slowdown in export business. But I think the tariffs, like I said, have really kind of kicked a dollar to the back seat, if you will. And it's all perception off of that of pretty much these mandates of you're going to buy this much ag, you're buying this much energy, blah, blah, blah. And the currencies aren't that big of a deal right now.
I definitely want to touch on the livestock market as well, because I haven't spoken with folks about that in a minute. And I've just been noting, cattle basically go up every day. Feeder cattle now above $300. It's pretty wild out there, and the herd's showing no sign of getting any bigger in those cattle reports. What is the outlook here as we look at some of the livestock markets?
Yeah, I mean, it's just like you're saying, the feeder cattle market have led this whole rally pretty much. Pulled the lamb cattle up with it. Record high cash, record high box beef. We could be at $400 box beef this week. It wouldn't surprise me if we're not. Surprisingly, demand has not backed down. The retail counters are still moving. We have very, very tight supply, especially in the north. Very, very little supply. In the south, it's more, contract cattle, if you will. And pretty much packers know what's coming. But up north, I still think there's upside yet in the cash markets. We had a great day today. I would look for cash to be a couple bucks higher again this week. But with cattle, usually, roughly now until Labor Day is seasonally a bearish time period. Prices go down. And it's kind of just been the opposite of the grain market, where we're just kind of ignoring seasonals, past historicals, and just keep in a rip-roaring market.
I think of a comment someone told me the other day. They were like, man, ribeye is $18 and a pork chop's $4.
Yeah.
It's not a hard choice for them at the grocery store right now. Yeah. So where does that end? I mean, it seems like are folks still just so determined to have beef at the moment that we're not seeing any less demand?
I think so, and I think keeping gas prices relatively low has helped that as well too. Where average family, whatever, 3-4 kids, we don't have to eat whatever chicken or pork every night. We can still eat a higher end cut of beef. And I think that's helped out a lot drastically. The border, is shut down, so we're not importing the Mexican feeder cattle like we were too. But go back to your question there, you look at the retail counter numbers every week, and we're not backing off of eating beef at all. I'm surprised we actually haven't. Like you're saying, it's pretty obvious, if you're tight with your money or whatever, which side of the meat locker do you want to be in?
Absolutely. Jamey, before I let you go, I did want to just take a look at the future now. We have this quarterly report out. We are halfway through, we're all the way through June now, and we're getting more and more closer to fall. What are the outlooks? What are some of the things you're watching for that you're keeping a close eye on? And I'm going to guess the first one's going to be weather.
Yeah, I think weather and tariffs, kind of finishing the summer out here. July 1 tomorrow, 3-day weekend. See if we can get some, maybe some weather cranked up after that or not. Doesn't look to be, threatening weather at all that I've seen anywhere in the Midwest. We still have, some talk of, preventing plant acres out east. There's still roughly about 3.5 million corn acres to be planted, about 11 million bean acres yet to be planted. We'll see how all that plays out. But, if we stick up here in the trend line yield 180 or higher, obviously we can afford to lose a few acres and still have a very, very comfortable carryout.
Jamey, as one last note, if folks were listening and interested in talking to you, is there a good way to get a hold of you?
Yeah, you bet. That's 785-338-4111.
Jamey Kohake, market analyst. He is the senior risk manager with Pinion. Thank you so much, Jamey, for joining us on Farm Here Daily. This is Farm Here Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. Additionally, you can find me on social media at Geiger Reports, as well as WHO TV Channel 13 every weekday in their morning and noon hour programs. Again, I am your host, David Geiger, and I'll be back again tomorrow, everybody.